Imagine the global economy as this massive, complex machine. Usually, we only look at one gear at a time.
Right. You might focus on inflation for a while.
Right.
Or maybe geopolitics.
Exactly. Or artificial intelligence, or the price of gold. But what happens when you actually get a chance to look at the entire blueprint through the eyes of someone who, actually used to help steer the machine?
It's a completely different perspective. The view from inside the control room, honestly, it shatters a lot of the illusions we have on the outside.
It really does. And to get that perspective today, we're doing a deep dive into a really fascinating source. It's a wide-ranging interview transcript from the Dutch financial channel, Holland Gold.
Yeah, it's an interview between Paul Buitink and Nout Wellink. And Wellink is a heavyweight. He's the former president of the Dutch central bank, De Nederlandsche Bank.
Right, and he wasn't just observing things. He was a major architect within the European Central Bank. He navigated the 2008 financial crisis from the inside.
And he worked alongside, the most powerful financial figures of the last 40 years. So when he talks about how the tectonic plates of our world are shifting, you listen.
Which is our mission today. We're going to connect the dots. From the legacy of central banking to, the weaponization of the U.S. dollar.
And he gets into the societal normalization of extreme events, too. Plus the crazy economic paradox of AI.
But wait, before we jump in, I do need to make a really important point to everyone listening. This source material, this interview, it contains some very strong politically charged opinions.
Yeah, he gets into international leaders, geopolitical conflicts, immigration. It's heavy stuff.
Exactly. So I want to be perfectly clear, as your guides on this deep dive, we are not taking sides. We aren't endorsing these viewpoints.
Right. Our job is just to impartially unpack the analytical perspectives. We're looking at how a former central banker views the world, not telling you what to think about it.
Totally. So let's start with a ghost that kind of hovers over modern monetary policy, Alan Greenspan.
Yeah, prompted by his recent passing at age 100. Greenspan he's a fascinating starting point.
He's a walking paradox. He spent his early years in his 40s as a hardcore follower of Ayn Rand. He was this staunch advocate for the gold standard.
He fundamentally distrusted government intervention, deeply.
Right. But then he becomes the central banker who essentially presides over this massive era of fiat monetary expansion. It's wild.
It is. But Wellink highlights a specific trait of Greenspan's that kind of explains his tenure. He had this deeply analytical, almost restless curiosity.
He wasn't the guy just reading the sanitized summary from junior analysts, right?
Not at all. Wellink says Greenspan would actually challenge the baseline facts. If a report said inflation was holding at 3%, Greenspan would stop the meeting.
To question the metric itself.
Exactly. He'd ask, are we accurately measuring the quality improvements in things like consumer electronics?
Okay, I love this example. So if a TV costs the same today as 5 years ago, but now it has double the resolution?
Right, and double the processing power.
Are we technically experiencing deflation in real value? Because you're getting way more for the same money.
Yes, he demanded that level of granular precision. And it earned him this almost godlike status for a while.
Oh man, the Maestro era. Wellink brings up the 2006 Jackson Hole meeting. They literally named the entire symposium the Greenspan era.
And he gets these standing ovations from the most cynical economists on Earth. They wouldn't stop clapping.
Someone even compared him to Mao, which, as Wellink dryly notes, is a highly questionable compliment.
Seriously. But it just shows the myth-making, People genuinely thought he'd cured the business cycle.
Until 2008 happened, and the fall from grace was just violent. Suddenly he's the villain, blamed for the housing bubble and the dot-com crash.
Which brings us to the core ideological contradiction. How does a free market libertarian become the guy who bails out the system? Wellink uses this concept of cybernetics.
Cybernetics. Let me try the analogy from the text here. He viewed the market like riding a bicycle, right?
Yeah, that's a great way to look at it.
So you're riding, and your front tire hits a rock. The handlebars jerk violently.
Mm-hmm.
But the system, your body and the bike's momentum, it automatically corrects.
Right, you shift your weight instinctively. You don't need a central authority or a government manual telling you how to balance. The bicycle rights itself.
So Greenspan actually believed the financial markets had that same self-correcting physics.
He did. He thought if capital was misallocated, the market would naturally reprice the risk and return to equilibrium. No heavy government intervention needed.
Okay, I have to push back on this, though. Did he really believe the bike was self-correcting? Because the Greenspan put makes it look like he was constantly grabbing the handlebars.
Ah, right, the Greenspan put.
Yeah, like Wall Street operated knowing that if a crash got too bad, Greenspan would just slash rates and flood the system with liquidity.
It was essentially putting hydraulic training wheels on the bicycle the second it hit a pebble.
Exactly. How is that a cybernetic free market?
Well, from Greenspan's perspective, he might have argued he was just providing emergency liquidity to save the plumbing, not the asset prices,
But Wall Street saw it as a guaranteed bailout.
which created massive moral hazards. Absolutely.
Yeah.
But Wellink steps back from this and makes a really profound point. We give central bankers way too much credit in good times.
And too much blame in the bad times.
Exactly. Wellink argues that the low inflation of the 90s, the so-called Great Moderation, it wasn't just Greenspan's genius. It was macroeconomics on a global scale.
Specifically China.
Yes, China entering the World Trade Organization, hundreds of millions of workers joining the global supply chain. It drove the cost of consumer goods down dramatically.
And it wasn't just cheap goods, right? China was generating staggering profits from this.
Huge profits. And what did they do with those profits? They saved them. They didn't just buy Western imports.
They needed a safe place to park trillions of dollars, which
Yeah.
created the global savings glut.
Right. And buying U.S. dollars kept their own currency weak, which helped their exports. So they just bought U.S. Treasury bonds like crazy.
Which basically did the Fed's job for them. If someone is buying every bond you issue, yields go down, interest rates stay low.
So Greenspan looked like a maestro conducting the orchestra, but he was really just riding a massive wave generated in Shenzhen.
That's a huge perspective shift, and it perfectly transitions to modern central banking, because if Greenspan was treated like this independent maestro,
The current era is totally threatening that independence.
yeah, the modern era threatens to turn central bankers into straight-up political instruments. The text goes deep into the transition from Jerome Powell to potential appointments like Kevin Warsh.
Well, Link talks about the intense criticism Powell faced from Donald Trump, like very personal insults about his IQ.
Just because Powell wasn't cutting rates fast enough for the political cycle, which brings up the whole concept of central bank independence.
It's the bedrock of modern fiat money.
Oh.
The idea that the people controlling the money printer have to be insulated from elections.
But if the law explicitly says the Fed is independent, how can a president actually force them to do anything? They can't just order a rate cut.
Well, Wellink uses a really chilling analogy here. He compares it to the Supreme Court.
Oh, this was fascinating. Unpack the Supreme Court analogy for us.
So a president doesn't need to break the law to control an institution. They don't need to rewrite the rules. They just need to change the people.
The composition of the members?
Exactly. It's institutional capture through attrition. If you appoint people who naturally share your exact ideological biases.
They'll act independently, but they'll just magically deliver the exact results the politicians want.
Right. You don't need to send them a memo. They're already built to do what you want. The independence becomes an illusion.
And the source also mentions this proposed pact between the Treasury and the Fed, which is a callback to the 1950s, right?
Yeah, the 1951 Fed Treasury Accord. After WWII, the Fed was basically subjugated to the Treasury to keep borrowing costs low for the government.
They were just the funding arm for the politicians.
Exactly. Until 1951, when they officially broke free to fight inflation. So when Wellink hears about a new peace pact today,
You have to wonder, does a peace pact mean protecting the Fed? Or does it mean subjugating them again? Permanently tying monetary policy to political whims.
it's a huge risk. And this attempt to mold independent institutions to fit personal needs, it bleeds into a much broader theme for Wellink.
The commodification of power. This part of the interview gets very stark. He looks at Donald Trump's approach to the presidency, and he sees unprecedented corruption.
Yeah, Wellink views it as treating the office not as a public trust, but as a literal business opportunity.
Right, like the merchandising. Selling branded Bibles, the golden sneakers, the luxury watches.
And those Melania and Trump coins.
It's just wild. But the most systemic issue he points to is the pivot on crypto.
This is huge. Going from calling cryptocurrency a scam and a fraud a few years ago to suddenly promising to make Washington the crypto capital of the world.
Promising to neutralize the regulators, launching his own personal family crypto ventures.
It's a total 180.
I was trying to think of an analogy for this. It's like watching a sports game, right? And the referee is out there calling the rules. Then at halftime,
He places a massive bet on one of the teams.
exactly, He places a bet, jogs back onto the field, and tells everyone he's changing the rules of the game to favor the team he just bet on.
And expects everyone to just accept it. The macroeconomic fallout of that is terrifying.
How so? Like, beyond just the grift of it.
It's the trickle-down effect of corruption. When leadership at the very top acts this way, it signals to the whole ecosystem.
That this is just how we do business now.
Exactly. It sets a new baseline. And that severely erodes public trust in all institutions. Remember, we are just analyzing Wellink's critiques here, but his point is that fiat currency runs purely on trust.
If the public thinks the referee is betting on the game, they stop believing in the game entirely.
Right. And when we stop trusting the system, we start accepting the unacceptable, which is his next big point.
Right.
The normalization of the abnormal.
This psychological decay. The text references a concept from a book by 37 psychiatrists. Normalizing the abnormal.
It's this collective desensitization.
Yeah.
Things that would have deeply shocked you 5 years ago just become background noise today.
Actually, let me ask you listening right now. Think about your own life. What's something you see on the news today that would have horrified you a few years ago, but now it barely registers? You just scroll past it.
It's a scary question to ask yourself. And Wellink breaks this down into 3 distinct areas where he sees this happening.
First is domestic, social issues.
Yeah, he talks about his own country, the Netherlands, a wealthy country failing to provide basic shelter.
People literally sleeping on the streets.
And society just getting used to it, like it's a permanent fixture of urban life rather than a massive failure.
We just step over them. Then he moves to the second area, immigration.
This is where he makes a highly sensitive comparison. He looks at the harsh treatment, the detention camps, the separation of families at the borders.
And again, to be clear on his perspective, he compares the societal mechanisms of this to pre-WWII Germany. Not the atrocities themselves, but the psychological mechanism.
Right, the loss of collective humanity. The societal acceptance of treating a group of people as less than human. The bureaucratic cruelty just becomes normal.
It's chilling. And his third area is geopolitics, specifically Gaza and Lebanon.
He focuses on the loss of proportionality.
Proportionality, meaning the military response should match the threat without causing massive civilian suffering.
Exactly. He sees the normalization of immense civilian devastation, whole cities flattened.
And what really gets him is the lack of strong condemnation from Western governments, even his own political party, the CDA.
They're just silent. So you synthesize these 3 things: the street poverty, the border camps, the disproportionate warfare.
They're all symptoms of the exact same disease. We are collectively desensitized.
And there's an economic root to this, too. Western nations are cutting foreign aid, the very aid that builds up developing countries.
Which forces economic migration.
Right. But then when those migrants arrive, the West complains about a lack of absorption capacity and locks them in camps. We create the crisis, then punish the victims of it.
It's a vicious cycle. And this loss of proportionality, it's not just happening in the Middle East, it's playing out between superpowers. The whole situation in Ukraine.
Geopolitics is truly on a knife's edge right now. Wellink looks closely at NATO's dynamics.
He focuses on Mark Rutte, right, the NATO Secretary General.
Yeah, Rutte has this reputation of over-accommodating Trump, buttering him up to keep the alliance intact.
But Wellink questions where the moral boundary is. Like, if Rutte justifies aggressive actions against Iran just to keep the U.S. happy.
At what point does appeasement destroy the moral integrity of the alliance? It's a brutal diplomatic tightrope.
And part of that tightrope is the constant arguing over NATO spending targets, the whole 2% versus 5% of GDP debate.
Oh, this part of his analysis is brilliant. The obsession with hitting a 5% target is just political theater.
I love the analogy used here. Think about a marathon runner who is physically starving, right?
Mm-hmm.
If you throw a briefcase with $1 million at their feet, it doesn't make them run faster.
They don't need dollars. They need physical calories. They need water.
Exactly. Budget constraints don't actually matter in a wartime scenario. Physical constraints do.
Well, Link makes this point about WWII. When survival is on the line, governments will print or borrow whatever money they need. The real question is, do you have the steel? Do you have the manufacturing base?
Right, investing efficiently in cheap, localized drone swarms versus throwing billions at outdated, expensive legacy military hardware just to hit a 5% GDP target.
$1 million tank destroyed by a $1,000 drone. It proves that throwing money at an inefficient system doesn't create security.
And speaking of security, the escalation ladder in Ukraine is terrifying. Deep strikes into Russia, the looming threat of tactical nuclear weapons.
It's an incredibly delicate balance. The U.S. is really the only entity that can restrain this escalation.
But they've been pulling back financial support. It's so unpredictable.
And here's the crazy geopolitical twist. You'd think China, being Russia's partner, would be stoking the fire.
Right, the no limits partnership.
But actually, China desperately wants stability. They fear a nuclear escalation because their entire economy relies on global trade. A nuclear event would shatter supply chains and cause a massive depression.
So China is actually acting as a silent deterrent to Russia behind closed doors. It's a bizarre web of fragile deterrents holding the world together.
It really is. And with all this chaos, the U.S. acting unpredictably, sanctions flying, wars escalating, trust in the traditional global system is just fracturing.
Which leads us to a massive shift. Where do countries put their wealth when trust vanishes?
They go back to the oldest asset in the world,
Gold?
physical gold. The shift in central bank reserves is staggering.
Let's give some context. During Bretton Woods, gold was huge, right?
Yeah, central banks held like 50 to 70% of their reserves in gold. But after the Cold War, it dwindled to a trickle. Everyone just trusted the U.S. dollar.
But now it's climbing back up. It's averaging around 30% globally.
And the emerging markets are the ones buying heavily. They used to hold maybe 19%, but now they're loading up.
But wait, help me understand this. Gold yields absolutely no interest.
Nothing. Zero.
Right. And in a modern digital economy, why are highly educated central bankers trading instant digital ledgers for heavy, shiny rocks? You have to pay to store it, to guard it. It costs money to own.
You're right, it's negative carry. But the calculus has changed. It's not about returns anymore. It's about the weaponization of the U.S. dollar.
Because the U.S. has been using the dollar as an instrument for sanctions.
Exactly. The U.S. controls the global financial plumbing. If they don't like what a country's doing, they can just freeze their dollar reserve.
Like we saw with Russia, hundreds of billions of dollars just immobilized instantly.
So if you're China or any other emerging market, you suddenly realize if your foreign exchange reserves can be frozen by a political rival overnight,
that digital money isn't really yours. It's just a permission slip on America's ledger.
bingo. This is the ultimate symptom of the multipolar world. They are buying gold for sovereignty and safety.
It's the ultimate insurance policy against geopolitical chaos. You can't freeze a physical gold bar stored in a vault in Beijing.
Exactly. It has zero counterparty risk.
So central banks are hoarding the currency of the past. But at the same exact time, they are trying to model the economic force of the future.
Artificial intelligence. It's a massive paradox.
A dual timeline of economic impact. Let's break this down because it's so counterintuitive. Short term, AI is actually highly inflationary.
Highly inflationary.
Yeah.
Most people think AI makes things cheaper and more efficient, and it will. But right now, the infrastructure build-out is insane.
The text mentions the U.S. alone is projected to invest $1 trillion by 2027.
$1 trillion
Yeah.
on data centers, upgrading energy grids, advanced microchips.
And all that requires copper, steel, massive amounts of electricity, and water for cooling.
When you dump $1 trillion of concentrated demand into physical materials and energy markets, it causes massive supply chain bottlenecks.
It drives prices up across the board. So short term, it's an inflation shock.
But long term, it's massively deflationary.
Because of the unparalleled productivity gains. Once the data centers are built, the marginal cost of intelligence drops to zero.
Right. But how that deflation impacts society depends entirely on the model of integration. And Wellink contrasts two very different approaches here.
The U.S. model versus the Chinese model. Let's start with the U.S. He calls it business-driven.
The American way is to push the tech to its absolute limits, prioritize profit, let the free market decide, and basically worry about the societal fallout later.
The fallout being mass job losses for white-collar workers.
Exactly. And the tech companies know a backlash is coming. Wellink mentions they're even trying to bribe the public with shares or token universal basic income ideas.
Just to avoid government regulation. Here's a tiny slice of the pie. Please don't regulate us.
Exactly. Contrast that with the Chinese model, which he describes as state-led and focused on harmonious integration.
This blew my mind. They want to use AI to elevate workers, not replace them.
Yes. There's this fascinating anecdote Wellink shares. A Chinese court actually ruled in favor of a worker who was fired and replaced by an AI.
Wait, really? A court ordered them to keep the human.
Yes. The court stated that AI must be used to make the worker's life better and more productive. It cannot be used to just replace them and create a new proletariat.
That is wild. Can you imagine an American court telling a corporation they aren't allowed to fire someone to increase profit margins?
It's a totally different philosophical foundation. Now, Wellink isn't saying the West should just copy China. Total state control stifles innovation.
But the pure American model risks massive societal disruption, which is why he desires a European mix.
Right, because if we just let the American model run wild, you get deep inequality. You're already seeing local resistance. Citizens are actively fighting new data centers in their towns.
Because they drain the local energy and water but don't provide any long-term jobs?
Exactly. People don't trust the tech monopolies anymore.
Which brings us to the final boss. We've talked about proxy wars, aging populations needing pensions, the multi-trillion-dollar AI arms race, climate change.
All of which require astronomical amounts of money.
Money that governments simply don't have. This is the nightmare keeping central bankers awake. The fiscal dominance trap.
This is a huge issue, and it's coming to a head at the European Central Bank. Christine Lagarde's term is eventually ending.
And Klaus Knot, the current Dutch central bank president, might take over.
But these EU appointments are just intense political horse trading. It's not a meritocracy.
Like, we'll agree to your budget if our guy gets the ECB presidency, right? Trading favors.
Trading favors to control the money printer because of fiscal dominance.
Okay, let me try an analogy for fiscal dominance to really ground this for everyone. Imagine the central bank is the designated driver of a car.
Okay, I'm with you.
But the government, who owns the car and pays the driver's salary, keeps ordering rounds of shots and physically forcing the driver to drink them.
And at what point does the driver crash the car?
Exactly. The driver knows they shouldn't be drinking, but the government is forcing them. So what does this actually look like in economics?
It means national debts are so staggeringly high worldwide that governments literally cannot afford for interest rates to go up.
Because if rates go up, the interest payments on the national debt would bankrupt the government.
Exactly. So politicians exert unbearable pressure on the central bank to keep rates artificially low.
The designated driver is forced to take the shot.
Yes. And if the government wants to borrow more, but the market won't lend to them, the central bank is forced to step in and secretly finance the debt by printing money to buy government bonds.
They monetize the debt, which risks permanent structural inflation.
It guarantees it. Because the central bank can no longer fight inflation. It's entirely dominated by the government's need for cheap debt.
So everyday people just watch their groceries and rent get more and more expensive forever.
That's the reality of fiscal dominance.
Wow. So when you bring all these threads together, the death of Greenspan's self-correcting market, the weaponization of the dollar, the loss of proportionality in war, the AI arms race, fiscal dominance.
The core currency at stake in all of this isn't money. It's trust.
Trust. Central banks are buying gold because they no longer trust the dollar.
Citizens are fighting data centers because they don't trust tech companies.
And we are normalizing extreme poverty in war because we no longer trust our institutions to actually solve them.
Our entire global economy is a fiat system. It's backed by absolutely nothing but faith.
Which leaves us with the final thought for you to ponder. If central banks are hedging with gold, and the political referees are changing the rules, and faith is the only thing holding the system together, what happens to a global fiat economy when the faith simply runs out?
It's a terrifying question.
It really is. Take a close look around at the abnormal things you've casually accepted as normal today. The tectonic plates are definitely shifting. Thanks for joining us on this deep dive. We'll see you next time.